Let's move on to the next problem in AS12. Tip and Top Limited has set up its business in a designated backward area, which entitles the company to receive from the Government of India a subsidy of 20% of the cost of the investment, for which no repayment was ordinarily expected. Moreover, there was no condition that the company should purchase any specified assets for the subsidy. Having fulfilled all the conditions under the scheme, the company, on its investment of 50 crores in the capital assets, received 10 crores from the government in January 20X2, accounting period X1, X2. The company wants to treat this receipt as an item of revenue and thereby reduce the losses on the P&L account for the year ended 31st March X2. Keeping in view the relevant accounting standard, discuss whether this action is justified or not. Now here, the concept is that 50 crores you are spending and the government is actually giving you a subsidy of 10 crores, right? Which is nothing but 20% of your cost of the investment. So if you invest 50 crores, 20% of that works out to 10 crores. So the government is giving you a subsidy. And the main point is that no repayment is ordinarily expected and you are not expected to purchase any specified assets for this subsidy as well. So the company says, I am under no obligation to repay it. And second is, there is no obligation to purchase any assets as well. So can I take it as income to my P&L account? The answer is no. The reason is, whenever the government is sponsoring, right, a part of the investment, right, it is in the nature of a promoter's contribution. So if the total, the government is bearing a part of the total cost of the investment. So 50 crores of which government is sponsoring 10 crores. It's more like a promoter's contribution. Now, as per AS12, we need to take it to capital reserve and we cannot recognize it in the statement of P&L. So the accounting treatment of the company or the intention of the company to take it to the revenue and thereby reduce the losses is not tenable. The reason is this subsidy is in the nature of a promoter's contribution. Therefore, it should be credited to capital reserve. This is the answer. So let's read out the answer for the benefit. As per para 10 of AS12, accounting for government grants, where the government grants are of the nature of a promoter's contribution, that is, they are given with reference to the total investment in an undertaking or by way of contribution towards its total capital outlay. For example, a central investment subsidy scheme, and no repayment is ordinarily expected in respect thereof. The grants are treated as capital reserve, which can neither be distributed as dividend nor considered as deferred income. So you can't distribute it as dividend and you cannot take it as a deferred income as well. In the given case, the subsidy received is neither in relation to the specific fixed asset nor in relation to revenue. Thus, it is inappropriate to recognize the government grants in the P&L account statement since they are not earned but represent an incentive provided by the government without any related costs. So the correct treatment is to credit the subsidy to the capital reserve account. Therefore, the accounting treatment desired by the company is not proper. Hope it is very clear. That's the end of the problem.